please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Moving on to some other stories, OPG Securities, the brokerage firm which has found itself in the middle of the NSE Algo controversy, seems to be preparing itself to counter SEBI's forensic audit report, which is expected to come out in December. Yash Jain is joining in with more details. Yash, what is the latest in this case? And this is the first time we are hearing a brokerage firm named, and of course the earlier element that you were sharing were that there have been raids also at former NSE employees' houses.
Well, exactly. As you rightly pointed out, the development which we saw in the morning is that there were raids at some of the NSE officials, the former NSE officials. And now what we're given to understand is that OPG Securities, which was one of the brokerage firm, which was in the middle of this whole NSE controversy, is trying to ring fence itself against any potential threat which would come from the investigations which are ongoing in the Algo controversy. Remember, SEBI is conducting a forensic report which is being done through EY and Deloitte, and the results of that forensic report are expected by December end. Now, what we're given to understand here is that OPG Securities has appointed an IIM Bangalore professional to conduct an audit of the company. This audit, which has been ordered, won't be presented before NSE or SEBI, but in a situation where SEBI's forensic report gives evidence that there were unlawful gains which were made by OPG Securities, early access to servers of NSE, then this report which OPG Securities will have from its independent research, from its independent study, will be presented to counter SEBI's report. We are also given to understand that OPG Securities has also appointed senior counsel Janak Dwarkadas to consult the company on the legal turf. So if there is any legal recourse which needs to be taken against SEBI's forensic report, that can also be done. So yes, from all corners, OPG Securities is trying to secure itself against this investigation.
All right, Yash, thank you very much for that. And now, finally, it's time to bring you up to speed with everything that's happened in the world of commodities. Manisha is right here with us. Manisha.
Thank you so much for that, Surbhi. And we just had the cabinet meeting, announcements a few minutes back. And the big thing for the agriculture commodities, of course, is that all restrictions on exports of pulses have been removed. Well, you have seen the pulses prices trade below MSP prices for the longest time and much lower, down by nearly 15 to 25% in case of some pulses. And that, of course, comes as a very big positive when it comes to the agro space. Remember, the government has been trying to boost the farmers' income, and that hasn't happened. But this step finally will boost the pulses prices and will give some relief to the farmers as well. Teague Nansekar of ComTrends now joins us to talk about that and more. Nansekar, hi, good to have you. Agro commodities first, and while of course the government has been promising, trying to do a lot of things, hasn't helped the prices too much. With the latest step now coming in, what is your sense for pulses? Of course, the edible oils are still awaiting some action there.
Absolutely. I think, the edible oil markets are kind of waiting for some cues from pulses. But as far as pulses are concerned, I think it's quite a good move coming on the backdrop of the policy measures we've recently seen. So I guess, the farmer-friendly measures, and this will kind of balance itself, and we're going to see fairly stable prices going forward.
You mentioned about the edible oil space, which is taking cues from the, pulses prices right now. There has been an expectation that we might see an import duty hike coming. That hasn't happened yet again today. In the light of no action yet from the government, would you see the edible oil prices declining then?
I think, having a consensus sometimes becomes difficult. The policy actions might not basically go in line with consensus. So it might come as a surprise over the weekend as well. It still can't rule it out. But yes, as of now, I think that expectation which is built up is going to be given up, and that premium will come down in the edible oil markets.
And that clearly has been the case. Nearly a percentage point down on soya oil prices, and soya bean has been trading in the negative as well. What also hasn't done well today has been the metal space, Nansekar. The weak Chinese data just about continues to linger into the sentiments.
Yeah, I have a slightly contrarian view on that, Manisha, because, the weak data, what we are seeing is industrial production data. When you go on curbing pollution and, put a cap on production, so that is going to reflect on this data. So it's kind of natural. It's not something which the market has not been expecting. So I think with the fundamental backdrop of, the demand still being fairly robust and supply still an issue, I think these are good levels to start buying base metals again, and specifically copper and nickel.
What is your sense on the other metal space, which is the precious metals, which continues to decline? Do you see any kind of support? And I would really want you to come out with a near-term, short-term strategy and slightly longer-term as well, because lots of people are buying in India with the wedding season in the thick.
Absolutely. I think, the near-term outlook clearly remains bearish because you have the backdrop of a Fed rate hike that's, we've seen even yesterday, it tried to break $12.88, but it couldn't because clearly there's a lot of pressure because, you're clearly having a stronger dollar ahead and a rate hike. But what is comforting is post the rate hike, we know how gold behaves. We've seen it in the last 2 years. So there is an incentive to go and buy it probably in this dip. But my short-term strategy would be to clearly sell it in any rallies from here for a target of possibly 29,000 odd levels. But my medium-term strategy would be to, again, look to buy that particular dip for a potential target of 1345 in the medium term, which is possibly till March.
Well, that really has been the case on charts as well, hasn't it been? Because always before the interest rate hike, the markets always see a decline. But post that, there always is a buying coming in. And that perhaps could be the scenario rather that we would see in the gold and silver prices this time again as yet. Gnansekhar, we'll let you go at that. Thank you so much for joining us with those strategies. And with that, it's a wrap up on this edition of Closing Bell. After the bell, we'll take all the action forward.